So when Vitalik Buterin, the co-founder of Ethereum, started moving tens of millions of dollars worth of ETH, the market pretty much lost its mind. You saw the headlines, the speculation, the fear, it was everywhere. So in this explainer, we're going to cut right through all that noise. We're going to follow the money on chain and figure out what was really going on. Was this a founder losing faith, or was it something else entirely?
This was the question on everyone's mind. You could feel the panic on social media, in trading chats. People were wondering, does Vitalik know something we don't? Is he quietly cashing out and heading for the door? But to really get why this one question caused so much chaos, you have to understand what the market felt like at that exact moment. You know, the timing for these transfers could not have been worse. I mean, seriously, this wasn't some calm, happy bull market. It was a total bloodbath. Everyone was already on edge, just watching their portfolios bleed out day after day. And just to put a number on it, Ethereum was already down a staggering 55% from its recent highs. The whole market was in this painful deleveraging cycle. Investors were on a knife's edge, so any piece of news that looked even slightly bad felt like it could be the final nail in the coffin. To really grasp the scale of the pain, just look at this quote. Now, this isn't about Vitalik specifically, but it shows you what was happening to big players all across the market. We're talking billions of dollars in leveraged positions getting completely wiped out, which just created this waterfall of forced selling. And, well, total panic. And look, this wasn't happening in a vacuum. It wasn't just a crypto problem. The whole global financial system was feeling the heat. Tech stocks were getting absolutely hammered, the Fed was signaling that interest rates were going to stay high, and a strong dollar was basically sucking money out of anything considered a risky asset, like crypto. And right into this perfect storm walks Vitalik with these massive transfers. Okay, so instead of just speculating like everyone else, we're going to do the one thing crypto lets us do that traditional finance doesn't. We're going to follow the evidence, right on the blockchain. We are going to trace every single step these funds took and see exactly where they ended up. So the whole journey starts right here. On January 30th, 2026, Vitalik moves exactly 16,384 ETH from his main public wallet. At the time, that was worth somewhere between 43 and 45 million US dollars. I mean, not as a huge amount of money. But the most important question isn't how much, it's where did it go next? And this is our on-chain roadmap. So the funds went from his personal wallet, Vitalik.eth, not to a big exchange like Coinbase or Binance, which is what you'd expect for a sale, but to something called a Gnosis Safe. From there, little bits were swapped using a decentralized exchange, and then moved on to their final home. That first step, though, that's the biggest clue of all. So a multi-sig wallet is not what you use if you're in a panic and trying to sell everything. Think of it like a bank vault that needs multiple different keys to open it. It's designed for secure, careful, planned treasury management. It is absolutely not designed for a quick rage quit. This was the very first sign that something different was going on here. So the clues on the blockchain were already pointing to a very planned, deliberate operation. And it turns out Vitalik had actually told everyone exactly what he was doing right before he did it. We just had to connect the dots. I mean, here it is, in his own words. He publicly announced this exact withdrawal. And notice how he framed it. Not as a sale for personal gain, but as a deployment of funds over the next few years for specific goals. This wasn't some secret dump. It was a public declaration of intent. So what was the whole backstory? Well, the Ethereum Foundation, which is the main organization supporting the ecosystem, was going into what they called a mild austerity phase. Basically, they were tightening their belts to focus only on the absolute most important core protocol development. So, to fill that gap, Vitalik himself was stepping in to personally fund all those important special projects that the foundation might not have had the budget for. And this is the really cool part. This is where the money is actually headed. He's funding the development of a full open source tech stack. We're talking everything from secure hardware all the way up to privacy tools. He's also sending a lot of it to cutting edge research in biotech and AI safety. This is all about building public goods for everyone, not about padding his own bank account. So when we put all the pieces of the puzzle together, you've got the on-chain trail, the public announcements, and the stated goals, the picture becomes incredibly, incredibly clear. This slide really just says it all, doesn't it? A panic seller, a dumper, sends their ETH straight to an exchange to sell it as fast as humanly possible. Vitalik sent his to a secure multi-sig. A dumper slams the market with one massive sale. Vitalik is doing small, phased swaps on a decentralized exchange to minimize the impact. A dumper acts in secret. Vitalik announced his plan to the world. The goal of a dump is personal profit. His goal is to fund the ecosystem. Every single data point goes against the dumping story.
And if you look back, this is not new behavior for him. Not at all. This is part of a long, consistent pattern. For years, Vitalik has been methodically donating his crypto wealth to really high-impact causes, from COVID relief in India all the way to AI safety research. He's even said publicly his goal is to give away pretty much all his ETH in his lifetime.
And here you can see the plan unfolding in real time. As of early February, only a fraction of that big chunk has even been sold. About $10 million out of the $45 million that he set aside. And it's being done in these small, controlled batches, exactly like you'd expect from someone who's trying not to disrupt the market.
Okay, but let's ask the question. Even if it was a donation, did a $10 million sale still hurt the price? Did it cause the dip? Let's put that number into perspective.
Right. Let's just look at the reality of the numbers here. The roughly $10 million Vitalik has sold so far, well, it's a tiny, tiny fraction of Ethereum's daily trading volume, which is often more than $20 billion. His sales are, quite literally, a drop in the ocean. They're simply not big enough to move the entire market.
And that leads us to the real conclusion here. The market didn't dip because of the new supply from Vitalik's sales. The market dipped because of the FUD, the fear, uncertainty, and doubt that was sparked by people seeing that first transfer and just screaming, Vitalik is dumping. The story, the narrative, had a way bigger impact than the actual reality.
I think this quote from some market analysts just sums it up perfectly. Far from showing a lack of faith in Ethereum, these actions actually reaffirm his deep commitment to the long-term health and decentralization of the very ecosystem he helped create. He's not selling ETH to get out. He's selling ETH to build more. So we'll just end with this thought. The initial knee-jerk reaction was fear. Fear of an insider cashing out. But all the evidence points to something completely different. An insider investing back in. And when you think about it like that, it reframes the whole event. Not as a bearish signal, but maybe, just maybe, as one of the most bullish signals you could possibly get.